Alrighty guys, welcome to a new video. If you're new here, my name is Ruben, and today we're going to talk about how to find and execute high probability setups. Let's get into it. If you're in the free community, I've got a checklist for you, which I posted in my previous video. We're going to use this to go through this PDF and through this presentation. A high probability setup is one that has a higher chance of winning. That's all it is, right? A higher chance of winning than it does losing. And the only way you can determine this, is through data collection. Now, what data collection, Ruben? I'll make another video on that, but simply take screenshots, collect data. When this happens, what happens? When we're delivering from this, what happens? When we're doing this, what happens? And this takes months and months and months. Like, you've got to give yourself time to allow this to play out, but collect data to make things work. And for me, after 2.5 years of trading, guys, collecting data and visually inspecting, I've done the hard work for you. So I'm going to talk about 4 things or 5 things today using this checklist and talk about what makes an A+ setup and what you guys can focus on in the future. So let's go to section number 2 now, and this is identifying higher time frame levels that are really important. The whole idea here, we first want to identify areas in the higher time frame chart where the price can react from. So higher time frame chart for me is the 15-minute or the 5-minute chart. Write that down. Now, the 15-minute chart is a great chart because it's not too high time frame where you've got to wait too long for things to play out. But it's also not too low a time frame that you're getting caught in every single move up and down. So for me, 15-minute fair value gaps are a great place to start, and they're areas where price can find support and resistance. Keep it simple. Take a look here. You can see we've got a 15-minute gap, a 15-minute bullish gap, a 15-minute bullish gap. This is from the 25th of June. I'm recording this today. I'll post it today as well. And it's from today's session. You can see here, price has traded into this, found support. Traded into this, support, into this, support. So nice and easy. Price can find support and resistance at these 15-minute fair value gaps. And this is one key area that I look to take trades from. This is where the high probability comes from. The higher time frame first, and then we're going to drop down into the lower time frame and have a look at how that works. Now let's take a look at a bearish example. So on the chart here, we can see the 17th of June, 2025. And on this chart, you can see this 15-minute bearish gap. You can see how price trades into it here, 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 and here, and it finds some kind of resistance. Keep it nice and simple. We can look for shorts here, or shorts here. In the same regard, guys, we can look for longs from here, or here, or here, and we've got a higher time frame backing. You might already know this, but it's the simple things that people miss. Everyone wants to know the new shiny strategy, the new, A+ model that someone on YouTube or social media, Twitter develops. But trust me when I say this, my strategy, the one that's allowed me to get payouts, the one that's allowed me to teach people consistently, are the most simple concepts combined together and identifying the higher time frame levels like these where price can react from. And this is just from a week ago. And again, it doesn't matter. Bullish, bearish, it does not matter. We can see that price uses these as support and resistance. That's the key point to take away from this. But what can you do from here? How can you implement this? You have to wait for price to engage these areas. 80%, like I say, 80% of taking high quality trades is waiting. 80%. The market conditions currently, when I'm looking at the charts right now on my separate screen, they're horrible. We're close to all-time highs. We're not going to trade that. And so today specifically, I told my Discord, I'm not going to trade today. I'm not going to trade London session. That is a non-probable situation to trade in when we're at all-time highs. Now, section 3 is determining what is reasonable. What's reasonable? What should price do? And a lot of people focus too much on the really complex stuff, like I said, but all I'm talking about here, guys, is the fact that the market is going to do what's reasonable. It's going to try and balance itself out. If we've just been stepping up and up and up and up for 5, 6, 7 hours, and we've moved 200 handles, are you really going to go for a long? If the market's tanked 1,000 handles, are you really going for a short? Are you really going to FOMO in? Are you really going to chase the trend like that? I wouldn't. And this is the basis of my strategy. We're waiting for higher time frame. We're waiting for what's reasonable. And I'll give you 2 examples here, right? Say in this chart we can see, right? We've got a range high here and we've got a range low. That's the range we're working in. So anytime we're in the top portion of that range, right here, we're looking for sells. Anytime we're in the bottom portion, we're looking for buys. Until that range is broken, we can play that range. Anything in the middle, we can use a smaller range. So range high and then range low. Down here, look for buys. Up here, look for sells. And trust me, combining the 15-minute chart with the principle of dealing ranges like I'm showing you here, it'll eliminate a lot of silly losses. And it'll allow your winners to run because there's more chance, it's more reasonable for price to run from premium or discount rather than from the equilibrium range. Section 4 is aligning the higher time frame with the lower time frame. Maybe one of the most important things, the thing that people struggle with, but ultimately it's a process, guys. Start with a higher time frame, identify those fair value gaps, number 1. Number 2, identify what's reasonable, premium discount. Number 3, if you get those 2 things tick and tick, drop down to the lower time frame and then use the checklist in the description below to answer these questions here and to talk through what elements you're looking for on these smaller time frames. So again, we've discussed the higher time frames, but we're asking ourselves this question: does the lower time frame suggest the same? Do you have your entry model? Do you have the turtle soup model? Do you have the macro inversion model? Do you have the change in the state model? It doesn't matter, right? An entry model on the 1 minute chart is not going to change what the market wants to do, guys. It's all about what comes before and what's reasonable. You pair those 2 things together with your preferred entry model that you have data collected on, and you've got a good quality setup to take. That's it. So on the chart here, you can see we've got a 15-minute gap. We've swept sell side here, and we've created this nice little inversion fair value gap. So it's quite a nice trade, to be honest. And you can see here, it yields at least a 1 to 1.5. We've got relative equal highs, that's low resistance, and we've got a nice impulsive inversion fair value gap. But there's more, right? That's just one example. Let's go into the next one here. All right, so right here, we've got a 15-minute gap. Price taps into that right here. And I wonder what time this is. I wonder because on my channel, I preach macros all the time, and they're just a way to combine price with time. Now, a lot of people say to me, Ruben, or ask me, I should say, they say, Ruben, what macro is the best macro? Like, is it the London session macro? Is it 350 to 410? And to be honest, it doesn't matter. This statement is the most important statement. Any macro works. It matters which macro lines up with price structure that we've already discussed. That's it. So for example here, this macro is the 750 to 810. You can see that here. And we're lining up with higher price structure or higher time frame. We drop back down to the 1 minute chart. We look for our entry here. That's the sell side sweep. This is the 15-minute gap. We respect that. We've got an inversion. We've got an entry. The stop goes here. We ride it higher. Perfect. And that's it. So I want to make this video nice and short and sweet. And before you guys go, if you're not already in the free Discord and you want to check out the checklist, I'm going to get on the screen here now so you guys can see. Download that below. It'll be in the free Discord. Any questions, leave them below. And if you like this style of video with this PDF, please let me know in the comments below. With that being said, be careful, guys. We're trading the all-time highs. I'm not trading this session. We'll talk soon. Have a great afternoon. Have a great night. Peace out.